Good afternoon. Welcome to Kenya News Update today. In a world increasingly driven by artificial intelligence, a single earnings report can send shockwaves across global markets. Today, we're diving deep into the stunning 14% surge in SanDisk's stock, a rally fueled by what the company calls overwhelming AI demand. But behind this Silicon Valley success story lies a complex and often troubling global supply chain. We'll examine the numbers, the technology, and the human cost. I'm your host, and this is our 12-minute deep dive. Let's start with the headline numbers that sent investors into a frenzy. SanDisk, the California-based flash memory giant, didn't just beat expectations, it obliterated them. For the second quarter, the company reported earnings per share of $3.62. Now, compare that to the $2.93 billion in revenue analysts were anticipating. Wait, let me correct that. The $2.93 is a revenue figure we'll discuss in a moment. The earnings per share of $3.62 smashed through the consensus estimate of just $2.12. That's a beat of over 70%. The market's immediate reaction was a 14% pop in the stock price in after-hours trading, adding billions to the company's market capitalization in mere minutes. But the real story is in the guidance. SanDisk isn't just looking back at a good quarter, it's projecting a tsunami of demand ahead. The company issued third-quarter revenue guidance of a staggering $4.8 billion. To put that in perspective, that's nearly double the $2.69 billion it reported in the same quarter last year. This isn't incremental growth, this is a vertical climb. And the driver? Unambiguously, artificial intelligence. CEO Sanjay Mehrotra stated on the earnings call that demand from AI data centers is insatiable and creating a supply crunch across every tech sector. To understand why, we need a quick primer on SanDisk itself. Founded in 1988 as SanDisk by Eli Harari, Sanjay Mehrotra, and Jack Yuan, the company's name is actually a portmanteau of co-founder Sanjay's name and the word disk. For decades, SanDisk has been a household name in consumer flash storage, think the memory cards in your camera, or the USB drive on your keychain. But its strategic pivot in recent years to high-performance data center storage is now paying off in an era defined by AI. The chips they make, NAND flash memory, are the workhorses that store and rapidly access the massive datasets used to train large language models like ChatGPT and its competitors. Now, let's visualize the engine of this growth. The most explosive segment for SanDisk is its data center business. In the last quarter, this division alone saw revenue skyrocket by 64% year over year. This isn't just a bump, it's a fundamental shift in the company's revenue mix. For comparison, the company's overall revenue for Q2 was $3.03 billion. So, a significant and growing chunk of that $3 billion pie is now coming from the servers powering our AI future. The demand is so intense that SanDisk is struggling to keep up, leading to that industry-wide supply crunch the CEO mentioned. This brings us to the first major perspective in our debate, the unbridled optimism of the tech sector. Proponents argue that SanDisk's success is a leading indicator of a broader technological revolution. They point to the $4.4 billion in projected revenue for the next quarter as proof that AI investment is moving from experimentation to large-scale deployment. The stock's jump from $12 to over $14 in a single day is seen as a validation of this thesis. For investors, this is a pure play on the infrastructure of AI. As one analyst put it, in a gold rush, sell shovels. SanDisk is selling the digital shovels. The financial metrics seem to support this, with earnings per share leaping from $5.11 in the previous quarter to the reported $3.62. Wait, let me clarify that sequence. The $5.11 is likely an annualized or different period measure. The key takeaway is the dramatic upward trajectory. However, there is a counter-narrative, one that looks beyond the stock ticker and the Silicon Valley boardrooms. This perspective asks, at what human cost does this technological acceleration come? And this is where our story takes a sobering turn, thousands of miles away from California. To understand the full supply chain, we must talk about Coltan. Coltan is a dull black metallic ore that, when processed, becomes tantalum, a heat-resistant powder essential for manufacturing capacitors in virtually every modern electronic device, from mobile phones to the very servers SanDisk supplies. This week, a horrific event underscored the dark side of this global demand. In the Eastern Democratic Republic of Congo, a region rich in minerals but plagued by conflict and poor regulation, more than 200 people were killed in a collapse at the Rubia Coltan mine. According to a spokesperson for the local governor, the artisanal mine, which produces about 15% of the world's coltan, gave way, trapping hundreds of informal miners. These miners, often working with rudimentary tools and no safety oversight, are at the raw material beginning of a chain that ends with multi-billion-dollar earnings reports in the United States. So, let's frame the debate. On one side, the undeniable economic and technological boom represented by SanDisk's numbers. The company is creating shareholder value, pushing the boundaries of computing, and arguably building the infrastructure for future economic growth. The stock surge from $12 to $14 reflects a collective bet on a prosperous AI-driven future. The projected revenue jump from $2.69 billion to $4.8 billion year over year is the kind of growth that defines market leaders. On the other side, a stark reminder of the extractive realities that underpin our digital world. The DRC supplies over 60% of the world's cobalt, another critical mineral, and a significant portion of its tantalum. The mining sector there is infamous for human rights abuses, child labor, and environmental degradation. The tragic loss of over 200 lives in Rubia is not an isolated incident, but a symptom of a system where breakneck demand for resources outpaces ethical safeguards. The $6.20 that might represent a cost per unit of raw material somewhere in this chain feels grotesquely disconnected from the value of a human life lost to extract it. Can these two worlds be reconciled? Some industry experts argue for ethical sourcing, initiatives, and blockchain-based supply chain tracking. Tech companies, including SanDisk's partners, have made pledges to audit their mineral sources. But critics contend these efforts are often superficial, failing to address the root causes of poverty and conflict in mining regions. The profit margins in finished goods like memory chips are so high, contrast the raw material cost with the $3.62 earnings per share, that the incentive to truly reform the beginning of the chain may be insufficient. Furthermore, the AI supply crunch SanDisk describes could exacerbate these problems. As pressure mounts to produce more chips faster, the demand for conflict minerals like tantalum could intensify, potentially pouring more money into unstable regions without improving conditions for workers. The race to meet that $4.8 billion revenue target has consequences that ripple far beyond Wall Street. So, what does this mean for the future? For SanDisk, the path seems clear: capitalize on the boom. They are likely to continue investing heavily in manufacturing capacity to alleviate the supply crunch. Their stock, now buoyed by the $14 mark, will be watched as a bellwether for the entire AI hardware sector. Every future earnings report will be scrutinized for signs that the AI demand story is sustainable. For the global community, and for conscious consumers and investors, the questions are harder. Does the responsibility for the Rubia mine collapse lie with the end-user companies like SanDisk? Should a portion of the billions in profit be mandated to fund safety and community development in source countries? Can technology itself, perhaps through AI-powered monitoring of mines, be part of the solution? These are not questions with easy answers, but they are essential to ask as we hurtle toward an AI-defined future. In conclusion, the 14% surge in SanDisk stock is more than a financial headline. It is a window into two parallel realities. One is a reality of exponential growth, technological marvels, and staggering corporate profits, quantified by metrics like a jump from $2.69 billion to $4.8 billion in revenue. The other is a reality of profound human struggle, where the minerals that enable our digital lives are extracted at an immense, and often hidden, cost. The story of a Silicon Valley chipmaker and a collapsed mine in the DRC are, tragically, chapters of the same book. As we marvel at what AI can do, we must also account for what it takes to build it. This has been our deep dive. Thank you for watching. Subscribe to Kenya News Update today.